and a conference over Mr. Snighter Albuquerque. Thank you, and over to you, Snighter.
Thank you, Bikram. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note a disclaimer mentioning these risks and uncertainties are on the disclaimer slide of the investor presentation that has been shared with you earlier. I will now hand over the conference to Mr. Imtiazur Rahman for his opening remarks. Thank you, and over to you, sir.
Thank you very much, and good afternoon to all of you. It is my great honor and privilege, on my personal behalf and behalf of the team present here, to welcome everyone to this call to discuss the financial and operating performance of our company for the second quarter of the financial year 21-22. I trust that you and your family are safe and sound. I pray that you and your family remain safe and sound. For the results, you must have gone through the press release and the investor presentations available on our website as well as the websites of the exchanges. I will begin my comment with an update on our economy, moving on to the mutual fund industry, and then to the performance of UTIAMC. We began this fiscal with the high-riding second wave of COVID-19, which the nation was able to overcome quickly. Now, we are so pleased that Mumbai reporting zero deaths due to the COVID-19 earlier this month. The workplace is now moving back to the offices as we continue with our normal business activities. So far as Indian economy is concerned, the Indian economy has started to recover as the domestic demand is gathering momentum, while aggregate supply conditions are recouping with the revival of various sectors. Softer than expected food prices have eased the inflation. The progress in vaccination drive and normalization mobility is renewing the confidence in our economy and in our country. The Indian economy is expected to grow at 9.5% in the financial year 21-22. There was an upward revision of 6 bps in the expected growth for the Q2 of financial year 22, raising the number to 7.9%. The coming festive season is expected to further strengthen the momentum. Several studies and surveys on consumption and hiring trends reflect the positive outlook on the back of increase in public investment and incentives by the government to boost the economy. The Indian capital market, the movement in the benchmark indices clearly reflects the robust earning recovery of the Indian capital market. Sensex rose by 12.7%, while Nifty rose by 12.1% during the quarter, crossing the 60,000 milestone for Sensex and 18,000 milestone mark for Nifty. Sensex stood at 59,306 as today closing and 17,766 on Nifty, up by almost above 55% and 56% respectively from the corresponding number on September 30, 2020. The Indian mutual fund industry is poised to grow. The quarterly average AUM for the Indian mutual fund industry stood at rupees 36.21 lakh crore as on September 30, 2021, growing by 9.14% as against rupees 33.18 lakh crore as on June 30, 2021, and by 31.2% from rupees 27.6 lakh crore as on September 30, 2020. The closing AUM of the industry as on September 30, 2021 was rupees 33.74 lakh crore as against rupees 33.67 lakh crore. The total number of folios for the industry as on September 30, 2021 also grew and stood at 11.17 crore, registering an increase of 8.84% during the quarter and 20% from the September 30, 2020. The SIP inflows crossed rupees 10,000 crore mark for the first time in September 2021, taking the SIP AUM of the industry to rupees 5.45 lakh crore, an increase of 12.6% over the last quarter. The SIP AUM stood at 14.8% of the overall mutual fund industry number. The total number of SIP account as on September 30, 2021 was 4.49 crore. In the equity-oriented schemes, multi-cap, flexi-cap and thematic funds saw the highest inflows, while ELSS and value funds witnessed outflow during this quarter. Debt-oriented schemes, especially liquid and low-duration funds, saw sharp outflows. Overall, the industry saw net outflow of rupees 47,257 crores. Let me share with you about UTI mutual fund number. I am extremely pleased to bring to your notice that UTIAMC has completed a year since its listing on the stock exchanges. In this past 1 year, our company has exhibited solid progress, registering a consecutive quarter of growth in quarterly average AUM. And we remain committed to enhance our abilities to grow sustainably stronger. The total asset under management for UTIAMC as a group registered a growth of 5.1% over the last quarter and 21% over the previous year, and stood at 12.63 lakh crore as on September 30, 2021. I repeat, our group AUM as on September 30, 2021 is rupees 12.63 lakh crore as against 12.01 lakh crore as on June 30, 2021. The quarterly average AUM for the July to September quarter for domestic mutual fund was rupees 2.09 lakh crore as against 1.87 lakh crore for the quarter ended June 2021. The quarterly average AUM grew by 11.6% over the last quarter and witnessed a year-on growth of 34.7%. UTI mutual fund quarterly average AUM market share stood at 5.77% of the mutual fund industry total quarterly average AUM for the quarter, an increase of 13 basis from the June quarter number. Our market share has gone up by 13 basis. The equity quarterly average AUM as on September 30, 2021 stood at rupees 63,177 crores, an increase of 60.8% over rupees 39,291 crores as on September 30, 2020. The market share of equity AUM stood at 5.2% for UTI mutual fund scheme. The quarterly average AUM for the index and ETF recorded a growth of 73% from rupees 30,679 crore as of September 30, 2020 to rupees 53,046 crore as of September 30, 2021. In the July and September quarter, UTI has added, important to know, and I repeat, in the July to September quarter, UTI has added 2.94 lakh folios as compared to 1.03 lakh folios added in the previous quarter. In the past 1 year, UTI has added 5.02 lakh folios, taking the number of live folios to 1.14 crore as on September 30, 2021. The open-ended equity-oriented schemes added 7.53 lakh folios, while the closed-ended scheme saw an exit of 1.92 lakh folios due to the maturity of various closed-ended schemes. UTI was able to capture 8.3% market share of the gross sales in the industry, with our net sales turning positive to rupees 7,774 crore. Our ETF and index fund net inflows constitute around 13.4% of the industry. Net inflows during the September quarter, while the equity fund net inflow for the period stood at 9.9% of the industry net inflows. The SIP inflows for the quarter ended September 2021 stood at rupees 1,196 crore, rising by 18.54% over the previous quarter and by 57.4% from the corresponding quarter in the financial year 2021. The number of SIP accounts rose by 47% since September 2020 and over 18.16 lakh live SIP folios in September 2021. UTI SIP AUM for the quarter stood at rupees 17,389 crore, an increase of 12.02% as compared to the previous quarter at rupees 15,523 crore as on June 30, 2021, and 55.4% as compared to rupees 11.187 crore as on September 30, 2020. Keeping up with our commitment to deeper and better access to beyond 30 cities, 23% of our monthly average AUM for September 2021 was contributed from beyond 30 cities, whereas industry stood at 16%. 107 out of our 166 UFCs or branch offices are in the city beyond 30 locations. The closing AUM for UTI mutual fund stood at rupees 2.17 lakh crore as of September 30, 2021, registering a growth of 12.1% over the last quarter and 43.6% since September 2020. UTI mutual fund overall closing AUM market share was 5.92% of the mutual fund industry, registering an increase of 16 basis points from the previous quarter. In August 2021, UTI mutual fund successfully launched the UTI Focused Equity Fund, an open-ended equity scheme investing in maximum 30 stocks across market capitalization to generate long-term capital appreciation. The fund managed by Mr. Sudhanshu Asthana endeavors to build a concentrated portfolio of the stocks with potential of long-term sustainable growth while tapping into transformational opportunities. UTI Focused Equity Fund mobilized almost rupees 2,540 crore during the NFO period and added 1.54 lakh folios. I am pleased to bring to your notice, and you have already been informed, that Mr. Vetri Subramaniam is our Chief Investment Officer, and Mr. Ajay Tyagi is our Head of Equity. We have also added talent in our fixed income team, and Mr. Anurag Mittal has joined us as a fund manager and deputy head of fixed income. We will continue to strengthen our team in the fixed income. In our endeavor to achieve faster growth, we have incorporated certain strategic refinement in our sales team to enable better focus and resource utilization. During the quarter, we witnessed the participation of 70 technology startup firms in our flagship annual event, the UTI Mutual Fund Innovation Summit Ignite, which provides them with an ideal platform to showcase their solutions and collaborate with UTI to solve the challenges we face. We selected two firms the AI which helps to communicate better with the customer in their native language, and Bamboo for robo advisory through the event. Let me share with you about our subsidiaries. The AUM of UTI International has increased by 112% from rupees 16,278 crore as on September 30, 2020 to rupees 34,536 crore as on September 30, 2021. Our international clients are spread across 37 countries, with the top 5 countries being Japan, Switzerland, France, UK, and Israel. These are primarily institutions, pension funds, insurance, bank, and asset managers. One of our flagship funds, the India Dynamic Equity Fund, domiciled in Ireland, has an AUM of USD $1.10 billion and is being widely recognized internationally. During the second quarter, UTI International has posted a net profit of rupees 65 crore, a rise of 136% as compared to the corresponding quarter in the previous year. UTI Retirement Solutions Limited. UTI Retirement Solutions Limited has been managing the NPS corpus for the government and non-government sector. As of September 2021, the AUM is rupees 1,86,716 crore and has a share of 27.98% of industry AUM. During the second quarter, UTI Retirement Solutions has posted a net profit of rupees 11.41 crore, a rise of over 1,000% as compared to the corresponding quarter of the last year. UTI Capital, the total AUM of rupees 1,136 crore, currently manages active debt funds like UTI Structured Debt Opportunity Fund, which was launched in August 2017 and closed in May 2019, having AUM of rupees 404 crore now. And UTI Stock 2, which was launched in September 2020, having AUM of rupees 456 crore, and the fund is currently in fundraising stage as well as in the investing phase. IITF, having AUM of rupees 276 crore as on September 2021. During the second quarter, UTI Capital has posted a net profit of 40 lakhs, a fall of 18% as compared to the corresponding quarter of last year. We are building this company. Let me share with you about the UTIAMC financials as a group. UTIAMC's financial improved on the back of strong net flows and cost control measures we have taken. During the second quarter, the company posted a consolidated net profit of rupees 199 crore, a rise of 67% as compared to the corresponding quarter of the last year. The half-yearly profit stood at 354 crore. The operating profit margin as a percentage of AUM for the September quarter was 17 basis as against 16 basis for the quarter 2 of the previous financial year. Along with improvement in our operating profit margin, return on earnings of the company on a consolidated basis is 25.1% in quarter 2 of this fiscal year. The PAT margin stood at 52% during the second quarter. Net worth of the company on consolidated basis is rupees 3,360 crore as of September 2021. With this, I would like to open the forum for Q&A, and I have with me my colleagues, Mr. Surajit Saha, CFO of the company, Mr. Vinay Lakhotia, Head of Operations, and Mr. Sandeep Santi, Head of Corporate Communications, Strategy and Investor Relationship, to take the discussions and conversation forward. I wish you and your family a very happy Diwali, and thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone now. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue is ready. To ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Kunal Tanvi from Banyan Tree Advisors. Please go ahead.
Hi, thanks for the opportunity and congratulations on good set of numbers. The first thing that I wanted to understand, we've been seeing this across the industry that even though there's an improvement in the asset mix for the domestic mutual fund, wherein the equity as a percentage of total AUM is increasing, but still we are seeing pressure on the yields. The realizations are coming down for the industry, and of course we have seen the same thing for UTIAMC also. Can you help us understand what's happening there? Is it because of the increasing competitive intensity, or is it that we have moved to a different slab in terms of the TER in our flagship equity schemes? Can you please help us understand that?
Kunal, I will request Vinay to answer this question.
Yeah. Hi, Kunal. So, you are right. Equity and hybrid fund as a composition of overall assets has actually increased in industry as well as for UTI. For UTI also, equity and hybrid fund as a composition of assets had increased by almost around 400 basis points during this half year. However, in terms of yield, we have been able to maintain our yield margin number at weighted average yield margin number at 43 basis points as compared to 43 basis points which has been charged over the last half year of 2020. Yes, I do agree there will be some bit of pressure on the margin number going forward, because as and when the newer asset is added to the AUM, which is yielding a slightly lower management fee, the overall yield will come down. Also, as you are aware, as and when the AUM of the fund goes up, the TER get reduced, so it might have a marginal impact on the overall AMC yield. But for the full financial year, at least we are confident that we'll be clocking AMC margin yield up close to around 44 to 45 basis points, a similar number that we posted in last financial year.
Sure, that's helpful. So broadly, while so it's kind of because of the size of the newer assets coming at a higher distribution cost, correct?
Yes, but still we are taking a lot of steps, including reduction on commissions and ensuring that the yield margins are being protected.
Sure. And second question was on the employee cost. When we see this particular quarter, there's a rise in employee cost on a QOQ basis as well. Like we've done some 100 crores in the employee cost. We understand that two things happening. One of course is that we are hiring and making our investment team stronger than what it was before. But we have also been talking about reduction in the employee cost, and employee bill for FY22 was expected to be lower than say FY21. So can you throw some light, what's happening there, and how should one look at the employee cost for the entire year and say next 2 years as well?
Surjit?
Yeah, I will go with the September 20 and September 21 figures. There is a difference of around 6 crores if you see our figures. Mainly because of two counts. One is, you must be aware that UTI has been outperforming the industry growth. Like industry has grown by 31% and we are our AUM has grown by 35%. Even on quarter we have done better, like industry by 9.02% and we are at 11.6%. So because of this, we had to give some spot reward to some of our employees who have performed well. So 2.29 crores we have expensed for spot reward. And apart from that, 2.50 we have provided additional for variable pay, which I said in the last quarter also. Last year we made a payment of 30 crores. This year we have provided 35 crores. So there is a additional expense of 2.5 crores. That is together is 4.79 crores. And 1 crore is due to the actuarial valuation. That is because in the last quarter and December, in the March also the
interest rate at which we valued our actual was around 6.45, and this quarter it's around 6.25. So there is an additional cost around 1 crore, and the balance is due to the medical. So this is the main cause of the reason why there is a difference of 6 crore in the employee cost. So Kunal, what you need to see is you need to put the salary increase of our block, and then you normalize it further. If you see salary increase, which is around 7.5% for the industry, and then we are managing our costs well. So there is a soft cost element here, which is a non-cash item, and also because of the incentive which we have wanted to give to the people, and that is the reason we raised 2,500 crore, and we will be able to offset that increased cost. So we are managing our employee costs well now.
Sure. And from overall year basis, like when I have to say compare FY22 with FY21, how should I look at it? Like on an absolute basis, we will see the same employee cost, or we will still see a lower employee cost than say FY21, which we had talked about in the last conference call.
See the estimated cost. If you see the data which I've got in front of me, even on the parameters which Surajit has explained to you, the increase is only 3%, right? Generally, the industry salary cost has gone up by 7.5%. So if we retain this number, it will be far well under control, right? As we have now, we are not anticipating any further employee cost.
Sure, got it. And so I'll get back in the queue. Thanks. Yes.
Thank you.
Thank you. We have next question from the line of Pritesh Chheda. Before we take next question, participants to ask a question, please press star 1. Mr. Chheda, please go ahead.
Sir, I just wanted some clarification on the yield side. So obviously there is a mismatch in terms of the AUM added at the rate at which it got added and the revenue growth rate. So I couldn't catch your comment that as and when the fund starts maturing and the fund AUM starts going up, the yield would eventually come back to 44 basis point or 43 basis point, whichever is the number, versus the erosion that we have seen now. So if you could elaborate there a little bit. And second, on the cost front, we had this retirement also ongoing, and so sum total of all, if you could give us what will be the employee cost number for FY22, that will be very helpful, instead of relatively comparing what is the growth rate that we have vis-a-vis the other companies.
Yeah, Vinay, first point, Vinay.
So I'll take the first question. So what I said is on the AUM side, as the AUM size grows, the overall TER gets come down. So as per SEBI formula, a 5,000 crore increase in the AUM leads to a reduction of TER by around 5 basis points. In case if you are able to pass on those TER impact to the distributor, the margin doesn't get affected. So there is a bit of pressure on the margin as and when the AUM size grows. And for the last 1.5 years, our AUM of equity and hybrid fund has been actually growing. So there is some bit of margin pressure as far as the AMC yields are concerned. And second point was, as and when the older assets get redeemed and is replenished with the newer assets, the yields are different on the older assets as compared to a newer asset. That's why there is always a bit of downward pressure impact on the AMC yield. But having said that, in spite of these two factors, we have been able to protect our AMC yield as compared to last year. Last year, our weighted average AMC yield was at 43 basis points. The current AMC yield for this particular half year ended is also 43 basis points. For the whole of the last financial year, the yield was somewhere in the range of around 44 to 45. We are confident that we'll be able to maintain the same yield number in spite of downward pressures on the yield because of these two factors that I've already explained to you. Does that clarify?
Yeah. So if you could tell us on the newer funds, what is the yield vis-a-vis the older funds or the older AUM that we have? Is the difference?
So we are not giving any direction as far as the margin number are concerned, but generally the sharing ratio between the distributor and AMC is in the range of around 50 to 70% of the total distributable TER get passed on to the distributor, and the balance remains with the AMCs. 50% being on the lower end of the curve, which is the individual financial advisor, and 70% to a national distributor or to a bank.
So my question was, no, on this part only. So between the newer funds which have been launched, from the yield perspective, what used to be 44 basis point, the newer funds are getting launched at what, a 10 bips differential or a higher differential? If you could just tell that.
So 44 basis point is the weighted average yield at UTI AMC level.
Perfect. And the newer fund?
And the newer fund, as I told, depending on the expense ratios of the fund and also depending on the kind of mobilization that you do. So what I have stated you a number of 50 to 70% is the commission that gets passed on to the distributor of the total expense ratio.
Okay. And
balance is retained with AMC.
Okay. And on the total, on the employee cost side, sir?
What is the question, employee cost? Can you come again?
I wanted to know what will be the absolute employee expense for this year, if you could help us understand that. So versus what was spent last year. Last year was about 400 and...
Yeah, standalone this is 380 crore.
Concall. Last year was 380, so versus that, what it should be this year?
It should be in the same range, or some lower figure will be there.
Okay.
The range bound is range bound, depending upon how do you perform, right? So if the performance goes better, then there is more incentive, but revenue will also be better. So the cost income ratio will be the most important thing to see, right? It all depends upon the performance of the individuals as well, but should be the same range bound.
And what is the variable portion in this in the employee cost?
Estimated is 35 crore for the full year.
Variable portion.
Variable point, yeah.
Okay. And so my last question is, post the IPO, now my guess is the lock-in for a lot of the banks would have got over in terms of their holdings.
Yeah.
And we know that T Rowe has a differential holding structure in the asset management trust and a different holding here. Any progress or any changes or any developments there, if you could help us understand?
I'm not aware about any changes. I have received no communication from any quarter about any changes. They are the sponsors, and the requirement of a sponsor is that 40% of should be there with the sponsor. So I have no comments to make on this, and I have no information on this matter.
Okay, but they have they increased their holding on the trust side?
No, there's no change in shareholding.
In the last 12 months?
No, there's no change in shareholding. In the trust company also.
Okay.
No changes in any shareholding by any one of them so far.
Okay. Thank you very much, sir.
You are trying to understand about the UTI Trustee Company, am I right?
Yes, sir.
No changes.
Okay.
Thank you, sir. We have next question from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for a good set of numbers. I just have four broader questions. First is on the employee cost. So, just to get my understanding right, you said that on an overall basis, we may be flat in terms of employee costs compared to last year. Am I right in thinking that way?
Yeah.
Okay.
Yes.
So if I look at last year, we had around 31 crores of ESOP costs, which this year would be somewhere close to 13-15 crores. So in the first half also, we have seen a drop in ESOP costs of around 8-9 crores already. Now, I understand we are making some hires at the senior level, and there have been some hires in terms of sales RM also in FY21 as well. But if I just go back to our earlier communications, it's been that we will see a good amount of savings in terms of VRS or a certain number of people going into retirement. And I mean, the understanding was that we will probably see some savings flowing through probably in Q2 or in second half. But based on your communication, it seems that we don't see any of that savings. I mean, I'm just trying to understand where is the disconnect here, because improvement in employee cost efficiency and overall productivity is one of the key levers in terms of growth and profit for us, other than the AUM which we are focusing on. So just trying to understand where is the disconnect here.
So I don't feel the VRS is a point here for the discussion. What our team has shared with you earlier about the natural retirement of this one.
Right.
So if you see the last year number, it was 380 crore as a consolidated number. And if you take the average salary increase is 7.5 to 8% for any industry, it should be more than 400 crore, right? We are giving an indication to you that it will be the range bound of the previous year. That gives the clear indications that there will be a potential saving, Viraj. And as my team has already also said that over the 5 years period, we are estimating a saving of 75 to 80 crore, and we stick to that, to the natural accretion, which is the retirement of the key business.
So there are two questions here. One is, based on a natural retirement schedule, when do we see bulk of the savings accruing to us? I mean, I asked this in the last call as well. Just trying to understand, is it FY23, 24, where more majority of that 70-75 crores will, where we start seeing in? So that is one. And second is, we have already been giving a good amount of ESOPs. And the idea earlier was that, as those ESOPs also kick in, the variable part or the performance incentive may also moderate. But based on what he's saying right now, that is not going to be the case. So just trying to understand.
Most of the retirement will come from 2024, 25 onwards, right? And the 5 years it will settle down. Next 3-4 years will settle down. So far as the normalizations of concern, the variable pay or the ESOP, when we close the year, we will give you a better picture on that. At this particular point of time, we are only increasing the variable pay by some percentage, right? 30 to 35 crore. And as you see the number, performance of the organization is very good, which you yourself have congratulated. So therefore, we need to wait on the overall employee cost number. Whatever the indication we are giving it to you, I think we are very confident we will achieve that particular number.
Sir, I'm sorry to interrupt. Kindly come back in the question queue, Mr. Viraj. Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, kindly restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Good afternoon. Good evening, everyone. Congratulations on great set of numbers. So first question is on the retirement solutions business. If I look at the AUM growth of the industry and the other two government players, it's on a closing basis sequentially it's been 10% for SBI and LIC, but for UTI it's 6%. And even if I look at from a March ending perspective, UTI is at 13% and the other two are at 17%. So what is the reason why we are underperforming in terms of AUM growth? Is it any specific reason that we are getting a lower share of the incremental funds coming from the government organizations?
Yes, we are getting a lower number for this particular half year. Hopefully, the number will be reset from the next quarter onwards.
Okay. And is the reason for that?
No, there's no reason, a specific reason for that. Right? It will be settled down. Yeah.
Okay. And sir, and how would you say your yields will move on the international business front? I think we had indicated that the yields on the international or the offshore fund will move higher going ahead, but we don't see the traction in the numbers. So what is the trajectory that can be expected on that side?
I think yield has grown as we have given you the number in our presentation. If you see, the yield has grown and the AUM has also grown to the IDF, the main fund, the AUM has grown. And the accrual, the real accrual will come from the quarter-on-quarter basis as we witness the growth. So AUM has grown, and hence yield will further grow, and we are not incurring any much cost there, any additional cost there. However, I must tell you is we are opening our office in Paris, to mitigate the risk related to the Brexit. But we are not adding many new manpower there. Cost will remain flattish, and the revenue will be more. So it will also be better.
Okay.
And it will appear in our presentation.
Yeah, it's there in the presentation, sir. Yeah, great. And lastly, sir, could you comment on how would you plan to grow your SIP book further? I've seen a very strong growth. Any specific actions you're taking to ensure that the SIP growth is better?
We are extremely focused to further grow on the SIP book. Our team, led under the leadership of Mr. Pushpendra Sood, he is deeply engaged with the sales team. We have got full-fledged strategy behind. We have tied up with all the banks, nation distributors, MFDs across the country to grow the book. And that is our key focus area.
Right, just to add some numbers.
Yeah, Sandeep.
If you look at our SIP book numbers also, now our SIP count market share has been close to 4%. We have also increased our SIP registrations now from 3.91% which we had last year to 4.32% in September. So as Mr. Rahman rightly pointed out that with the joining of Peshodhan Dastur as the head of sales and the focus that he is bringing in driving sales to SIP, we are very confident of improving. Improving our SIP book. If I look at my fintech participation also, I've got very good share which is coming from the fintech. And be it Paytm or Grow or Kuvera, all these players we have been improving our share, and we are hopeful and confident that, as I mentioned, with the digital team, with the sales team in place, we should be able to improve our SIP book from the fintech as well as overall SIP book. Right?
Justly on this fintech part, could you give us some numbers as to what is the industry size and how much are we? What kind of market share we have there?
Yeah, so if you look at the overall SIP market share that the industry has, it's around 42 lakh crores. We have a share, and as I mentioned, that we are improving our share. We have a share which is as high as 20% with some, and as low as 0.19%. So overall, we have a share of which is close to around 2%.
Just I didn't get the overall number. 42.
42 lakh crores.
No, our share is 2%.
2%. Our share is 2%, Prayesh.
Okay, got that.
So 42 lakh, 42,000.
42,000 crore, right? 42,000, right?
42,000 or 42.
So, yeah, okay, got that. Thank you so much.
Thank you. We have next question from the line of Sahej Mittal from HDFC Securities. Please go ahead.
Good evening, everyone. First, I had a couple of questions. So first was on the other expenses bit. So, last time we had 62 million odd of an expense from retirement solutions business. So is there some change in the reporting this quarter? Why such sharp drop in other expenses, given that the revenue from retirement solutions has seen a growth? The second was on the other income bit. So the other income seems on a higher side, given that last quarter had some one-offs from sale of investment in big basket. So what could be the explanation over there? And the third would be on the tax rate. The tax rate has seen some sharp drop. So what's the current balance of tax losses in the foreign subsidiaries, and what should be the full year tax rate look like? And how long we can take this kind of a lower tax rate? That'd be my question.
Firstly, I would like to clarify, even in the investor presentation, we have given a note below line. If you see that GST interbranch invoicing has been eliminated from both other income and other expenses being contra in nature, and impact has been given in each of the slides. So this, if you remember, we assured in the last quarter also, and this was a requirement from your colleagues and everybody that we need to adjust this GST, which we show in as a contra entry, we show in other expenses as well as in other income. So this we have rectified in this particular quarter, and we have given a proper note in the investor presentation.
So even then the net other expenses have dropped from 50 crores to 38 crores, even after adjusting.
No, if you see the half yearly, it has gone up from 58 crore to 96 crore. Half year 21 and 22, from 58 crore it has gone to 96 crore, the other expenses. This is mainly because of 4 reasons. One is already it was there in the last quarter, that PLI, RPLI brokerage charges, it is 7.5 crore. And 9 crore trail fees for UTI International, which is in tandem with the growth of AUM. And 10 crore is the PFRDA charges which we need to pay. If you remember, 5 bps is the total fees. Out of that, 3.5 is the income from UTI retirement, and 1.5 is being paid to PFRDA as charges. So that is 10 crore. And the another 10 crore is because of the digital initiative, Bloomberg and cloud, and the NFO expenses. So this is the difference between that 58 crore in half year 21 and half year 22. It's 96 crore. 38 crores difference is there. And in respect of your other income, that is M2M and sale of investment, again, because Ascent India Fund, which we have investment in it, Robosoft, there was an exit. We got a good amount of money from that. And apart from that, 558 crore of FMPs have got matured during this quarter. So that also has added to our income.
So could you quantify the first exit? I couldn't get the number.
Which one? Just come back again, please.
Could you quantify the number? There was an exit in this quarter as well. So what would be the number?
Robosoft, it's around 28 crore has come in that Robosoft exit. Like,
How much you gain on that?
yeah, I'm telling you the gain on this. And in respect of the taxes, what has happened is that for this 558 crore as well as that this asset investment, there was a deferred tax reversal is there around 12 crore. So our capital, from the deferred tax, it has come to the taxation, the capital gain tax. But there was an asset fund 5 crore loss which got adjusted. So our effective tax rate has become 18% if you see. 14% on a half year basis, and last half year it was 18%.
So what does the NFO pipeline look like for UTIAMC?
We are planning to launch 2 more funds at an appropriate time.
Any on the active equity side?
Yes. So we have a SEBI approval for launching a multi-cap fund, UTI multi-cap fund, which will be on the active side, and we will be launching it at an appropriate time. Apart from that, we have plans to launch some of the other passive funds for which we have got approval.
Okay. Thank you, sir, and all the best, and happy Diwali.
Thank you.
Thank you. We have next question from the line of Aman Shah from GT Investments. Please go ahead.
Hello. Hi, sir. Thanks for the opportunity. So my question is, if we see our market share in active equity, it is around active equity plus hybrid equity is around 5 to 5.5%, while passive equity is around 13.5%. At the same time, the flow of money is such that we have a lot of flows coming from the passive side, which leaves our market share in passive at 13% constant. So just was curious, like how is the things have evolved over the past, where active market share is 5% while passive equity market share is 13%.
Vinay?
The EPFO, you are talking of the market share of ETF versus vis-a-vis the active fund?
Yes. Yes.
Yeah. So that's because of the EPFO allocation that we received under from EPFO, which they are investing into our Nifty index fund, Nifty ETF fund, where we received roughly around allocation, both the SBI mutual fund as UTI mutual fund, this is the allocation. Because of that, we do have a predominantly higher share under the ETF category of the fund.
Okay. Sir, my second question was in UTI Retirement Solutions, our AUM has increased from some 140,000 crore to 180,000 crore, while the sale of services has increased a lot more from single-digit crores to 40 odd crores. Can you please explain?
Vijay, that sharing the piece, yeah.
Yeah, I told you that out of the 5 bits, we are keeping it 3.5 bits and 1.5 is being paid to the PFRDA charges. So straight away there is a 7 times jump on the fees. So it is totally based on the AUM, but we have garnered, and it depends on when that allocation and money has come to us.
Okay. Thank you, sir.
Thank you. We have next question from the line of Lakshmi Narayanan from ICICI Mutual Fund. Please go ahead.
Also, a couple of questions. On the international piece, right? There is a good jump in the AUM. So I just want to understand what led to the jump. You also mentioned that some fund has been launched. So just want to understand whether this base can be sustained or it will improve from here as we exit FY22.
Your question is whether this AUM will sustain?
No. So what led to that big jump in the AUM? Was it any specific scheme that actually got in the big jump, because it almost doubled, right? So I just want to understand what led to that jump. And
yes, we have launched some structured product, and it was the reason for that the AUM has gone up, and also from the last quarter, the AUM of IDF has gone up by almost $250,000, dollars. That is another reason for that. And indeed, it is likely to sustain. Your details breakup?
Yeah. If you compare with the 3920 and 3921, see, IDF figure in 20 was 2,672 crore, which has gone up to 8,090 crore. And apart from that, our JSS Sarasa fund also is a new fund which has come in this particular half year. That itself is around 1,200 crore. Apart from that, other Phoenix fund also, we have gathered a lot of money in that. It's around 8,000, 10,000 crore. It's a different deposit fund like we have, debt fund. So there also we got a big corpus. So overall from 16,200 crore, it has gone up to 34,500 crore.
Any active intervention we did in terms of recruitment of people? Of course, the Sara fund was there. Because do you see this actually even growing from here for the next full year, or can we see almost strong jump from here? Anything in the pipeline, like on the Indian mutual fund side, you said that there is some schemes that are planned. Anything on the international side?
We didn't get your question. Can you need to come again, please? Lakshmi?
My question is that this particular thing, what interventions we did do to increase this? Was it a team or that relationship which we struck? That is number one. The second is that from here, when we actually look at for the full year, any other schemes are going to be launched on the international front?
Yeah, we are planning to launch 2 funds, right? During the next half of the second half of this financial year. And
in the international side also.
Pardon me?
In the international side also.
Yes, international side also. We are planning to launch 2 funds, and we are confident that we will maintain the momentum.
Got it. Sir, one more question if I can see.
And it's all about a team. We have got a very solid team to take it forward. Yeah.
Excellent. Sir, if I just look at your debt portfolio over the last 6 or 9 months, it actually, if I just exclude the money market fund and the liquid fund, it's broadly around 31,000, 30,000 crores. It has actually broadly stabilized. While the FMP rundown has not actually created a material difference in your non-liquid, non-money market fund. So just want to understand your plan. Do you intend to increase it from here? Why it's been quite stagnant on the debt fund side? If I just exclude the money market and liquid fund and gilt, which are low yield products.
So Lakshmi, on the open-ended income category of the fund, the inflows have been positive now on a quarter-on-quarter basis, both for Q1 as well as Q2. In fact, on the half-yearly basis, the inflows from open-ended income category has been positive to the extent of 883 crores. We have seen some bit of redemption under the closed-ended fund because of a low interest environment. There has not been a rollover of a fixed maturity product where we have seen redemption close to around 6,500 crores. But we are pretty confident that because of the uptick in performance of some of our flagship income category fund like UTI Treasury Advantage Fund, short-term income fund, the inflows should be robust enough in next few quarters as well. And we should be able to increase our market share going forward.
Thank you.
Thank you, sir. We are taking the last question from the line of Nidesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. Sir, can you share some details on the distribution channel, specifically on the banking side? That we have been trying to take market share higher on that front because our scheme performance has been very good. So is there any development or any progress on that in this first half?
I think I would like to submit is, so far as our equity fund are concerned, 61 out of 70 guided architecture performs, our funds are there in the bank and nation distributor. So far as fixed income funds are concerned, 37 out of 70 guided architecture performs, our funds are there. It gives a clear indication that after relationship with the banks and our performance and backed by the very consistent performance is helping us to grow our share of wallet with the bank and the nation distributors.
Sure. And secondly, on the fintech side, you mentioned your market share is 2% of 42,000 crores.
Yeah. Yes.
That is lower than your overall market share of close to 5.8%.
Yes, Sandeep, yes. What are we doing to catch it up?
So, Nidesh, I would like to just correct myself. See, what I was talking about is the industry count. The total number of industry count is around 42,65,000. And of that SIP count, we have a share of around 1.92 or 2%, close to 2%. So that's what I was trying to hint at that point in time. So, as Mr. Rahman said, that we are taking initiatives to improve our market share in the SIP, as we had earlier enlisted. And with the fintechs coming in strongly and their improvement and the kind of tie-up that we have, we are hopeful that we should be able to grow our market share. And I had shared some numbers earlier, which also suggests that we are seeing an uptick in the kind of sales that we are getting from the fintech sales.
Sure. So this 2% market share is in overall SIP industry, or is it in SIP fintech industry?
SIP fintech industry.
Okay.
Overall, our market 4%. Share is around 4%. If I look at my overall count share, it's around 4%. While I'm talking about the fintech industry, it's around 1.92%.
Yeah. Because your fund performance has been very good, so ideally your market share should be higher. There is no involvement of a distributor there. If the funds are performing well, then automatically your market share should increase in the fintech segment.
Yeah, I agree with you, Nidesh.
We are working to achieve that goal, yes?
Sure. Thank you, sir. That's it from my side.
Thank you. Any
Thank
questions or we can close?
Sir, that was the last question. I'd now like to hand the conference over to you for closing comments. Mr. Rahman, thank you.
Yeah. Thank you so much, and thank you very, very much to all of you for your participation and for your support. UTI management, me and my team will be fully committed to take care of the interest of all the stakeholders. We are fully committed to continue to be a professionally managed company, and we are there to support our partners, our MFDs and distributors, and we are here to create the wealth for our investors. And thank you very much. Wish all of you a very happy Diwali. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of UTI Asset Management Company Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.
Thank you.